You know those things that you're like, okay, this means I made it? I saw a thing on Instagram and they built into their house a 20-foot high cabinet off to the side of their living room, and their Christmas tree just slides into it. And so for 11 months out of the year, the Christmas tree just sits in this 20-foot high cabinet next to the living room. And when Christmas comes around, they just roll it out of the cabinet and it's already done. It's completely just ready to go.
Welcome to Drunk Real Estate.
Grab a drink and enjoy the show.
Hey there, and welcome to episode 22 of Drunk Real Estate. I am Kyle Wilson, and once again, I am joined on this All Hallows Eve with my best friends in the world, starting with Mr. Jay Scott. How's it going, Jay?
I'm happy today. So I've been getting lots of feedback everywhere I go. People love the podcast, but they say we need to be drunker. If we're going to call it Drunk Real Estate, we need to drink earlier and more often. So today I already started. I'm high noon and a half a glass of wine in. So hopefully this will be a more fun episode than it normally is.
One random high noon and then just started on the wine?
It was sitting in the fridge before I opened the wine, and I'm just like, I don't feel like opening the bottle just yet. So I grabbed it and drank it.
Well, what are you drinking right now?
I'm drinking my daily drinker, my Oberon cab from Napa, California. Stopped at Costco earlier today and just grabbed a bottle.
Just to annoy me again, just sticking with the old classics.
Absolutely. You've done the same thing.
Mauricio, what are you doing over there?
Dude, I'm doing good. Looking forward to Christmas. Just a couple months.
Bringing that up again? Jesus.
I'm going to invite Tessa over so she can help me with the Christmas tree next week.
No, you are not bringing that stuff into my home.
I'm still convinced you're joking. There's no way you're setting up for Christmas.
Check out my Facebook post. I posted all the ornament. Anyway, I am doing good.
Fun fact for the listeners: Mauricio and his family do not celebrate Halloween. They go right to Christmas.
We set up the Christmas tree on Halloween. So anyway, I am drinking this. Actually, So I'm drinking. Stag's Leap is a pretty well known winery here in Napa, but I picked up this. I don't know if it's Korea or Korea Chardonnay. It is delicious. Delicious. Highly recommend it.
Oh, there you go.
Is that his plug?
Nope. That's just my enjoying my
wine. He might not be around for the plugs at the end anyway, because he's got to deke out. So you can plug your live if you want right now.
Oh, that's right. I gotta get going early, so maybe I'll do all my plugs in the middle here.
In the middle. You did have a good live this week. My wife sat in and said you did a good job. So Mauricio's Monday live. AJ, how's it going over there? You got some Diet Coke for us again?
I do. Fountain. So it's the good stuff, the real stuff. Just trying to get over Mauricio's putting up Christmas tree at Halloween.
Your mood just halved right now.
Just totally like I can't accept this.
AJ, you should be on board with this, right? Like I always want to be in the top 1% or 0.1%, things that nobody else does. Who else does this? I'm in the top 0.001% of this, right? So
that is true. You are the outlier for sure.
You can't just do weird things and say like, "Oh, I'm doing what other people don't, so I'm cool." Like, sometimes it's just weird. I'm the only one who yodels underwater. Yeah, you're weird. All right, fair enough. Well, I am switching it up this week, and I'm going with a Bud Light.
What?
Bud Light?
I'm leaving now. I'm out.
I'm showing you why. Because Bud Light came out with a special edition, and I don't know if you could see that on there. Philadelphia Eagles, last team in the league with only one loss. We're going to the Super Bowl. Oh, what a game it was.
Wow.
Okay, there's Kyle's plug.
What, for the Eagles? They plug themselves. They don't need anyone plugging them.
Apparently they need Bud Light, which is probably not the best representative, but
hey, I think it's been long enough, right? Like we're allowed to drink Bud Light again, or is it because it's still pretty cheap, actually. You can get like a 15 case for like $12.
Hey, Kyle, you know who else has only one loss? After starting 0-4, I think I'm going to go 3-1 in fantasy football.
Oh, wow. Yeah, and you got a big game tonight, you and Jay.
I started 4-0, and
You guys should post. You should post your teams on social right now to show how close you are. And the Monday night game is crucial, so they can follow along. Actually, we're doing this afterwards, but either way, it's going to be exciting. I'm going to watch just for you guys. All right. Well, we are switching it up a little bit this week. We it was back in July that we did this last time. We did a predictions episode, and we thought it was time to do a little update. So instead of doing the 3 topics, introduce some topics, give you the traditional Jay Scott and AJ Osborne monologues. We thought we would mix it up and have a little bit of a discussion. So I'm going to start off by listing a topic, talk about what you guys said last time, and see if you're changing anything and how you did, if it's on pace or off pace. So let's start with since we got.
And for reference, let's for those that didn't listen to the prediction episode, although everybody should have because it was great. But our original prediction episode that we're recapping was back in the end of July, I think, and it was predictions through the end of the year. So this is kind of like an interim report card on our predictions from July.
And I want to go. I need to go first, but I definitely need to go first on the first one because I think it's the only one that I'm like on point. And so I want to make sure I get that out of the way, and then I'm going to be wrong on all the other ones. So I want to be first. I nailed the first one.
What's the topic?
The Fed's fund rate.
Fair enough. So we're starting off with the Fed funds rate. Mauricio, he said the Fed is going to be forced to pivot 5.5 or 5.75 if nothing breaks, but he's calling a pivot. So how are you?
So because right now we're at basically 5.5, right? Between 5.25 and 5.5. So basically it's 5.5. Nothing's broken. The Fed hasn't had to pivot yet. We're basically at 5.5 to 5.75. Thank you very much. I'm going to leave.
That was not your prediction. So
he's still got 2 months for the pivot to happen.
His prediction was 2%.
No. Look, I'm reading. You did this excellent work and summarized our work. I said if nothing breaks, it'll be at 5.5 or 5.75, and that's exactly where we're at. I don't know what else you want from me.
Not to hedge your bets. Well, let's go to Jay, who just more clear cut just said 5.5, right, Jay? You still sticking to that?
Yeah, I'm sticking to that. I think. I mean, could we see another quarter point? Possible. The November Fed meeting is, I'll say tomorrow when we're recording this, but it's actually today when this comes out. So if you're listening to this on the day it came out, 2:00 today, we should know if Fed's raising rates again. We're pretty much at 0 chance of that happening. So the question is, will there be another rate hike in December? And we have some other stuff to talk about that will drive that decision. But I'm going to stick with no, they're not going to raise rates again in December, even though we have some other economic data that indicates that I could be wrong.
Yep. And AJ stuck with you, and he said 5.5 as well. You sticking to that, AJ?
Yep, I'm sticking with it. I thought we might have in the short term it go higher, but I think it's going to stick right around 5.5.
Yeah, what's really good for me is that I said 5.5 or 5.75. So even if they raise in December, I'll be right in that range.
That is, next time I should guess 3 or 4. I'll guess 4 different numbers.
Yeah, I think they're going to end up somewhere between 0 and 10. It's perfect.
So let's make a short-term prediction. Who thinks? I think we all agree there's not going to be a rate hike tomorrow. Who thinks there's going to be a rate hike in December? I say no.
No.
Interesting, Mauricio.
I'm going to say it's a coin. No, I'm going to say no as well. I'm going to say no.
Interesting. Okay.
In my opinion, the 10-year Treasury is basically doing the job for them, right? Like it's
exactly. I agree.
Until we see some sort of movement down with the 10-year Treasury.
Although the GDP numbers came out pretty strong, so that's a tailwind on that one, I think.
Well, that and unemployment, that was like crazy.
But if you dive into the GDP numbers, though, like half the GDP numbers were government spending, and then the other one was inventories. So it was basically people stocking up on inventories for the holidays. So that's not going to happen again. That's going to be the opposite next time.
And don't forget I think the inflation number there was also kind of interesting. But anyway,
well, that's okay. Here, let's pivot a little bit. Let's say what are we calling next the final GDP for Q4? What do we think that's going to come out? Jay, what do you think?
So the Q4 number, meaning the number that comes out in January, I'm going a good bit lower than where we are. I'm going to say right where the Fed wants it to be, 2%.
Mauricio?
That's probably right. Although, can I make one observation though? Because I think a lot of people miss this. When we say 2%, like let's use 2% as an example, that is an annualized rate, right? That doesn't mean that quarter went up 2%. That quarter actually went an average of 0.25%. So multiply that by 4, you get to 2%. Just a quick point there. But yeah, I think it'll be between 1.5 and 2.
And again, we're talking about GDP. We're not talking about inflation. So we want that number, like a decent number. We just don't want it too high, because if it's too high, that's going to lead to inflation.
So wait, are we talking annualized GDP, or are we talking just the GDP for the quarter? Like this, so the quarter was the one that was hot, wasn't it? Like the 5% read.
But it's annualized. But that's my point. It's whatever the number was for something that's annualized. So it's really that for that quarter would have been 1/4 of that.
Oh, I didn't know. I thought it was just for the quarter.
Yeah, it's annualized though.
Yeah, it's if we saw the same thing 4 quarters in a row, that's what the year would be.
Yeah, it's annualized.
Okay, AJ, what do you think?
So I'm going to go just over 2. I think that weirdly, I don't get it. I don't understand why, but consumers, although they're so upset about prices, are consuming like crazy, and going in at such low unemployment into the holiday season, while there are already people are shopping like nuts, which I'm still totally honest, I'm a little baffled by. You would think that we would see people pulling back, but credit card debt's still going up and savings still going down. And so I guess they're just going to keep spending. So 2.3.
The big issue isn't necessarily credit card debt. It's more how much we're spending of our disposable income on our credit card debt, and that's up to over 6%, which is not a historic high, but a high in like the last 20 years. Like spending 6% of our income, of our disposable income, on our credit card bill. That's just nuts.
Yeah, I just mean they keep using it.
They just did a revision to the savings rate where they were actually a lot higher than was previously thought, by like $1 trillion or something. These government surveys are always great with their revisions, but they were apparently off by like $1 trillion, and our consumer savings is a lot higher than they previously thought. Anyway, I'm going to take the under on all you guys. I think this is the quarter that crushes our economy. I think spending is going to go way down. Student loans just came up. To AJ's point, credit cards are all-time highs. I don't think people are going to spend nearly as much of the Christmas holidays. They have all these inventories; they're not going to get sold, and GDP is going to be, I don't know, under 1. I'll go crazy. Let's go under 1.
Well, here's the interesting thing. So a lot of people think that like when GDP comes out in January, if it's a bad number, that could hurt things. Like if it's under 1, that could make things look bad for the economy, but we'll know that information. I mean, that's the nice thing about the Christmas holidays, is that we get a lot of data just in the days after Black Friday and Cyber Monday. Basically, we know if it's going to be a really popular shopping season or a more mild and slower shopping season. So we will know by the end of November if what is likely to happen in Q4, which means if it's a really bad number, if it looks like people aren't shopping, then Mauricio's prediction of a recession this year could come true.
So the personal saving rate's at an all-time low. The personal saving rate's at like 3.4. The only other time it got that low was in like 2008. So the personal savings rate below 5% has actually only occurred in the years leading up to 2008, and then only in the last, as of January of 2022, and right now it's at 3.4.
Everything was fine in 2008, so I'm not worried about it.
Hey, I just pulled up something that's going to make me change I want to change my prediction here. I just pulled up the Atlanta Fed. They do their prediction for the quarter. And they're always they start off with like, oh, this is going to be a 20% quarterly GDP increase. And then throughout the month, the quarter, that number just keeps going down and down and down. They have it right now at 2.3%, which means it's going to be like 1.2% or something. So I'm actually going to go more where Kyle is and going to be like, around 1%, give or take.
Well, I mean, we talked about this on our WhatsApp thread, but as Kyle mentioned, one big contributor to GDP is inventory. So how much businesses are buying, because businesses stock up on inventory for the Christmas season, and so it's very possible that if they find out that things aren't as robust as they thought, they're going to slow down on buying for Q4, because they're not going to need more inventory in Q1. They're going to have lots of stuff sitting on the shelves. And if we see a lower than average inventory buy in Q4, then that's going to hit GDP pretty hard. In fact, if you look back at when GDP went negative 2 quarters in a row a couple of years ago and everybody was yelling recession, the thing I was saying was, no, when supply chains started to open up, businesses stocked up. They were worried they wouldn't be able to get stuff later. And so they bought as much stuff as they could. They filled their shelves. But because they did that, they didn't need to go and buy more inventory for 2 quarters. So basically, GDP took a hit for 2 more quarters because businesses weren't spending on inventory. And I think we could see the same thing here.
Hey, and AJ, don't forget that, at least, the Raoul family really contributes a lot for Christmas shopping at the GDP. And we've already done our Christmas shopping in third quarter of GDP. So, we've already pushed that number as high as we can.
Dude, you got to make up half of the increase in GDP for Christmas shopping because you're doing it for frickin' a year.
But you're going to crush the economy without your Halloween shopping.
This guy probably celebrates half Christmas in July or something. All right, we got to move on here. Let's talk inflation. So the reason we're all saying that the Fed is not going to raise again must mean that inflation is under control. So if we let's start with AJ this time. Inflation, he thinks that he thought that by the end of the year it could drop to 2.5%, but you don't think it'll stay there. It'll go back up. So AJ, you sticking to that, or you got some new thoughts?
Tell us where it is now.
I don't think it will get there.
Well, so if you look at right now, so depending on there's obviously a lot of different measures, but the core, the PCE is at 3.4, the core PCE is at 3.7, and CPI is at 3.7. So it's somewhere around that 3.5.
I thought that rates would have more of an effect on employment and spending, and it just hasn't. I'm shocked by it. So I don't think it'll get below 3.
Staying above 3.
Yep.
Jay, where are you going with it?
I have to agree. I'm surprised. What did I say? I said that it would be between 2.5 and 3.5. But honestly, in thinking back, I'm surprised. I thought it was going to be anywhere over 3. But as of today, I don't see any possible way. I mean, it would have to be negative for the next 2 months, because I mean it's a 12-month moving average. And so unless it's significantly negative for the next 2 months, we're not going anywhere near 3. We're going to be closer to 3.5. The question is it going to go to 4?
So you guys think it's going to be close down to 3, or we're looking at that sticking around 3.5?
No, I don't think it will get to 3. I'd say 3.5 to 4. I don't, but I agree with Jay. It may 4. So 3.5.
Jay, same.
I'm going to say 3. I'm going to say where it is. CPI at 3.7, where it is today.
Mauricio?
I mean, I put down 3 by the end of the year. I think you guys are right. I think it's, just from math, right? Like you said, you'd have to have like negative. You'd have to go into a recession today to be kind of cool. But yeah, I'm going to say same thing. I'm going to go with the consensus, probably closer to 3.5.
Yeah, today is the last day for the recession to happen for your prediction of.
Yeah. But I agree. By the way, just to give props to, I agree. I think it's not in our notes, but I remember I was saying this last year that, inflation doesn't go up or down in a straight line. So I'm with AJ where, we were at whatever we were when we were doing this, that inflation was going to start going down. We're going to have disinflation, but then at some point it's going to take back off. I think the bet we had, I think Jay and I had a friendly bet as to whether it was going to be above, is it going to get to double digits before the end of the decade or something? That's really is it going to, that kind of discussion. But in the short term, who knows? But I do think it's going to eventually go back up and start creeping, towards that 6, 7 again.
Inflation isn't something you cure easily. It's not, this isn't a faucet. Like it's so easy to put money into the economy. That is so simple. To get it out of the economy though, that is really hard. I mean, you got to think, first of all, how are the people utilizing this $4 trillion that you burst into the economy, which people hoarded, right? And so now trying to get it away from them, and you have inflation and you're sitting here going, oh, their money's being less. They're still not putting it to work. And you just don't get rid of it. You don't get rid of $4 trillion with 8% inflation, right? You just can't do it. And it's not something, this is a cruise ship. It's not a speedboat. You just don't turn these things around.
So for those numbers geeks out there, keep in mind that CPI or inflation is annualized. We take the last 12 months. And so the last 3 months of this year, October, November, December, are going to, in that formula, replace the 3 months from 2022, October, November, December. And so if you look back at those 3 months, what you'll see is that the CPI in those 3 months, inflation in those 3 months was 0.3%, 0.4%, and negative 0.1%. For those 3 months. So if you average those 3 months, it was 0.3% each month on average. And so if you think we're still at about 0.3% for the next 3 months, then by the end of this year, CPI inflation is going to be exactly where it is today. If you think we're higher than 0.3 per month, then at the end of the year, it's going to be higher. If you think we're lower than 0.3 per month.
But December's bringing that down too, though, right? So if we just go off of October, November, then December is not going to come out to the next month, so we could technically get a decent drop.
Technically, that negative one was November, not December. I gave it out of order, so
messing with me.
So, but I think it's reasonable to think that we're going to be somewhere around 0.3% for the next couple months. So I'm going to say, yeah, we're at this 3.7% is where we're in the year.
Were you manipulating the numbers, Jay, to kind of make your agenda? Is that what you're doing?
Massaging. It's a good thing you said that before I went my turn, because I was going to go that we were getting down to 3.3. But now after saying that, yeah, we're going to, based off of my research, I think we were going to stay right around where we are right now. Okay, let's move to unemployment then. Unemployment's been sticky. It hasn't broken that 4% yet. Do we think it's going to before the end of the year? I know that who we start with now. Let's go with Mauricio first.
All four of us, by the way, said over 4% by the end of the year. Mauricio said 8%.
No, I said, if you remember, I said we could still be sub 4% in December.
Again, why are you guys taking me out of context?
Check the notes.
Oh, you're right. We might get to that 4%.
I'll take the win on the unemployment.
Fair. So your prediction was it was either going to be over or under 4% unless it was at 4%.
Oh, come on. Just like your prediction on the inflation, you had it'll be 2.5 to 3.5. Give it a full 1% spread. All right, we're going to Mauricio though, who threw out 8%.
No, so again, dude, you guys are taking it way out of context. Come on. So what I said is it'll depend on the timing of the recession. So my prediction was there was going to be a recession in September, October. The timing is clearly off. So when that recession hits, I'm sticking to it. It'll go to 8%, might even go to 10.
So Mauricio, basically the theme of this is going to be Mauricio went all in on a recession happening in October, and all of his predictions are based on that for the end of the year. So everything's going to be completely off.
Okay, hold on. Not just a recession. Since 1950, we've only had unemployment hit 10% twice. So not just a recession, like an epic recession.
But I agree with Mauricio. At some point in the future, we're going to hit 8%.
Yeah, look, when you put a gun to my head and say predictions by the end of the year, but so obviously I'm actually pushing it further back. I might be now further back from you, Kyle, because you're going to go early in the first quarter. Is that what your prediction was on the recession? I might be going more like so that March time frame. Anyway, no, it's been super sticky, man. I think everybody that I've listened to knows the Fed really well. I mean, they're trying to get this unemployment number on, and it's just not working. They're trying to get the housing down, to get the mortgage rates up. Mortgage rates are the highest they've been in a very, very long time. You guys are in multifamily. I heard it's getting close to 9 in some of these places, like 8.5, 9. But nothing's happening. Like the prices are still, high. And so everything that the Fed's been doing hasn't been working, which again, to me, it's like they're going to continue to do that. Unless something breaks, they're going to continue to try and do that to get that unemployment number up. And I think they're going to succeed at some point. I think they're going to overcorrect. They're going to want that unemployment number to go up. Then they get what they want. And then they're like, oh, crap, let's stop. And it's not stopping. So I eventually do think it's going to happen when the recession hits. But obviously, at this point, I'm not going to say, I'm going to backtrack a little bit or say I was wrong on the 8% for this year. But I still think you're going to see that, when the recession hits early next year.
I was just saying, keep in mind that we talk about these big headline numbers, this unemployment number, 4%, 4.5%, currently at 3.8%. But that's not the whole story. And we've had this discussion on this show before, where unemployment, even if that number is still looking pretty good, we're starting to see some cracks, and unemployment, the whole overall picture is not as good as that one number might indicate.
Yeah, only a third of the people are answering the phone calls these days too for those surveys about whether or not they're employing or having jobs. So the data is getting less reliable.
They can't pay their phone bill. The phone gets cut off. They can't even pay their phone bills.
Yeah, but no matter how you look at it, the employment problem's bad. I mean, you're talking since 1970. This has been the first time we've ever had below 4%. This is historic kind of unemployment, to a point where we have labor issues. I mean, the labor shortage is real. You can still go to towns and they have, restaurants closed because they can't get workers. So the labor shortage is a big deal, and it doesn't make sense. We have 8% interest rates and we have labor shortage, right? Like, I mean, it's the Fed doesn't understand what's going on. And at the end of the day, here's the harsh truth that nobody's saying out loud. You cannot get rid of inflation when you have historic labor issues, because everybody is employed and everybody is getting income raises. It doesn't work. You can't do it, right? So the Fed needs at least a normal unemployment rate to be around. I mean, I don't know how you do it until you get closer to 5% plus unemployment to really tame this beast. Outside restructuring debt. If you restructure debt, though, you're gonna have unemployment. So it's a problem. And the reason it's a problem, people are like, I don't understand. Why is GDP going up a problem? Why is low unemployment? Those are all good things. They are not good things when you have inflation, right? They seem like good things, and they are at 2% inflation rate. But when you can't even get inflation down below 3.7%, these are not good things. It's not normal. And that's the problem. We don't live in a normal economy. $4 trillion, and we can't get rid of this problem. So I worry, like everybody worries, that doesn't change. The Fed's going to do more. And they're trying to land the plane down gently. But if they don't get some of these numbers to move, it's going to be harsh.
Well, so keep in mind still, though, we have like our labor participation rate is still not to 2019 levels. So you say everyone has jobs. Everyone has jobs who wants a job. I question these kids these days. You talk about restaurants closing down because no one wants a restaurant job. I would say those are the undesirable jobs that they can't fill. The more white collar jobs seem to be a little bit more normal. But yeah, just going back to the predictions for unemployment. I agree. I don't see much happening between now and then to have us head that below 4%. We're going to still assume that everyone's going to keep spending. I think it's not going to happen until the next quarter when we see that hammer drop. No one's going to be buying stuff for these holidays.
And then we're in an election year. So what's the Fed going to do in an election year? That's my big question. Is can you imagine if the Fed goes and lifts interest rates higher to 10% in an election year?
We can tackle that. We'll tackle that in our January prediction episode. But I do want to say AJ kind of hit the nail on the head earlier when he pointed out that the only way we can get the bad stuff under control, inflation in this case, is to break the economy. But if you break the economy too much, there's a lot of pain. So the soft landing everybody's talking about, the hard part is how do you break the economy just enough to fix the bad stuff without hurting the good stuff too. And that's a tough thing to do.
Maybe mini recession, which brings us on to the next little recession call. Are we still thinking there is a recession, soft landing, or Jay, I'll just let you keep talking. Do you think we're going to see a recession or not?
Yeah, I think so. Back in July, AJ said, quote, I think it's going to be late Q4, but we won't figure it out. I'm sorry. AJ said, I think we will have a recession, but I think it will be so mild that it will be debated. And my response was ditto to AJ. So back in July, I was thinking minor recession, if any at all. I know Mauricio at the time and you at the time were saying we're going to see something bigger, and I actually agree with you guys now. I don't see. I feel like the Fed's overcorrected. I feel like 5.5% plus Treasuries going up, plus the Fed selling off their balance sheet. I mean, between all of those things, it there's no doubt in my mind that we've overcorrected. And I think in the next 3 to 6 months, we're going to see the results of that overcorrection, and it's not going to be pretty. Not necessarily a 2008 type event, but I think it's going to be a very clear recession.
Seems like Mauricio's sticking to his guns here.
Well, obviously the timing, I'm obviously, like I really, there's something about September. It's the end of the third quarter. A lot of things start moving around that usually trigger something. That obviously did not happen. So, I mean, so obviously that's not going to happen. I kind of have my eyes now again on sort of the March of next year. But no, I mean, I think I lost my train of thought. Is that what happened? So I'm going to go to Kyle.
Well, AJ, we'll make sure AJ's still on the same page here with Jay for calling for his little mini recession. Just a tip.
Like, I was hoping we'd have a mini recession, but it's like a pressure cooker, right? Is if we had a mini recession, it was going to let steam out. But the longer we go with not getting steam out, the worse this is going to be. So the more further on in the year that we get, and we're not seeing unemployment, that's why I'm like, this is bad, because this pressure is building. It's not being released. And I get very nervous that we end this year and none of these issues have been resolved. And then we go into next year and it pops. And the pop is bad. And that's what I'm worried about. We expected, I think the Fed was trying to get that soft landing. We wanted steam to get out and to release some of this boiling pressure that we've got. And it just hasn't happened. So it makes me now start to go, and I don't see anything in this year. I mean, consumers are doing their thing. Everybody's still moving along. So first quarter of next year, you just wonder, do we get done with this busy season, with the Christmas seasons, everything? And then then the dominoes start to fall. I mean, I get worried that
credit cards are a beautiful thing.
Yeah.
That's it. Kind of. Thanks, AJ. Because actually, that's kind of where I was going to go. Where the Fed's almost been, quote unquote, in their minds, they've been lucky, or I would say they're kind of lucky that nothing's bad's really. Because I'm expecting something bad to happen. That's going to force them to pivot. They haven't been forced to pivot, so they're going to continue doing what they're doing, which is they're trying to keep interest rates higher for longer. They're trying to get unemployment up. They're trying to get housing down. They're trying to bend or break what they have, and because there's been no dramatic event, whether it's a banking crisis, whether it's whatever, that hasn't forced them to come down, they've kept it up for longer. And to your point, that puts in a tremendous amount of stress on the system, where they might get away with what they want to do, which is keep interest rates higher for longer, but ultimately that's just not going to be a good thing. I like the way you described it. It's that pressure cooker, and we need that pressure to resolve. And to me, the pressure was going to resolve just because something was going to happen, and they just keep papering over it, like the banking crisis. It's kind of, I didn't check the bank.
Can I throw one more prediction on top of that? Because I was saying Q1 is going to see the recession, and I thought it was because we're going to have an awful spending season at the end of this year. There's also one more thing that I'll throw out a prediction right now. One more thing that if we make it through that and we make it to the end of February, March season, what's going to happen in March is that bank term funding facility is set to expire in March. So what happens? So for just anybody who doesn't remember bank term funding facility, bank term funding was set up to basically prevent SVB from happening to other banks. You could take in these long dated treasuries that were way underwater, and you could trade them in 1-to-1 to the Fed, and you could basically get this loan back of just liquidity whenever you needed it. And so the Fed keeps saying, oh, banks are fine. Everything's fine. Banks are fine. Don't worry about it. But slowly, this bank term funding has still been ticking up. More banks are still using it. It's not like they used it just once back then. They're still using it more and more and more. I think it was like another 10.
It's the most they've ever done. They're up to still $108 billion. I mean, this is the highest.
Right. And so if we get to that March and all of a sudden the Fed has to come out and say, hey, look, everything's fine. Don't worry. But just in case we need to extend this, then all of a sudden alarm bells are going to go off. Everyone's going to freak out. And that's going to be one more thing that's going to send us into a recession. So I'm throwing that out there too.
Yeah. I'm looking at the graph here. Remember when it came out in March of last year, that's why it's a 1-year program. It kind of peaked right there about 79 think it's billion, right? 79 billion. And then it kind of went sideways for a little bit. But now from 79, which is the peak, now it's at 109. So $109 billion every, I mean, it's just, I mean, if that isn't QE, I don't know what it is. So maybe, AJ, maybe there's part of your explanation. I know people don't want to call it QE, but that's definitely liquidity that's being pumped into the system. And that may be preventing the, they're trying to suck on other things. They're trying to tighten and suck liquidity out. But on the other hand, it's like on the right hand, they're trying to suck liquidity out. But on the left hand, they keep funding these banks because they know that if the banks fail, it's going to be even worse.
Well, even what they did with commercial real estate. So if you look at the commercial real estate debt, I mean, it's not, commercial real estate's not going to implode the banking system. The banking system's $23 trillion, right? Right now, we have distressed assets at around 60 billion, 41% of that is in office. But the government told the banks to roll over the debt. They said, even if they're not, don't foreclose. We want you to work it out and to just patch it on and get through. To which the banks said, yeah, okay, we agree.
Well, here's a new prediction that's thrown out there. Does anyone think that we're going to see a bank failure in the next year? Another bank failure?
I mean, a big bank failure, because there'll no doubt be bank failures, but are we talking a big one?
Some not top 5, but like top 25 bank.
I mean, how screwed up? You would have to be so screwed up that you don't even have like short-term mortgages or something, that you can't go get a loan that nobody else in their right mind would lend you money. But if you can get loans, you can any business can survive. Now, to your point, Kyle, at some point, once they cut that off, it's the cutting of them off, which is what's going to cause the problem. But they could just keep extending. If you have an American Express card, right, you could be unemployed, you could be homeless, you could be like, but if you have an unlimited American Express card, you can still pay your rent, you can still pay food. I mean, you can keep that thing going forever if they keep extending you credit. And that's what the Fed's doing. It has an unlimited balance sheet, and they're giving unlimited loans to any bank that's in trouble. Now, at some point, they are theoretically constrained by how much securities they have on their balance sheet, because obviously they're loaning. That's the swap that they're doing.
The big thing is deposits. Deposits are still going way down.
Right. So at some point, you run out of your mortgage-backed securities. You run out of these treasuries. You run out of your security. At that point, and again, this goes to my point. The longer that this keeps dragging on, it's just like an elastic band. Once it snaps, boom, you're in deep.
So is that going to happen this year or no?
No, I don't. To your point, I think, dude, the government is so great at kicking the can down the road, right? So, I mean, March comes around, they'll come up with something, and then they could kick it down another. I mean, honestly, I think they're going to keep kicking it down until the bank runs out of the bank runs out of collateral, and so they're going to have to come up with another. I mean, at some point, the papering is going to end.
Well, I mean, think about this. It's an election year, which we could end up with Trump and Biden again. Oh my gosh, kill me now. The Fed is going to be freaking out. They're going to be like, we do whatever it takes to keep stability here. Because if you end up with that, a huge recession, I mean, this is social chaos, right?
I'm going to have so many marriage proposals for people wanting to move to Canada. It'll be crazy.
So they're going to kick it down the road, or they're going to do everything in their power to. They're going to, because the Fed doesn't like doing that. They don't like touching things in election years, and they try to make it's social contagion of fear of, that's really bad to the economy. That is unpredictable, and that's scary.
They're habitual can kickers. Well, that'll be my label for them. We got to keep this moving, though. So let's move on to our worst prediction category of all of them. And I'll go with Jay first. That is the mortgage rates, which is directly affected by the 10-year treasury. I think Jay came in around or just below 6% by the end of the year. Our mortgages are currently over 8%. So do we think they're coming back down to 6, Jay, or we just throwing in a towel and say, hey, we got this wrong?
No, I'm not giving up on this one. So I think 10-year treasuries are going to be higher and for longer than we expected. But I don't see them sticking around at 5, especially.
Oh, you'd have to see like down to 4 by the end of the year then.
Yeah, but I'm not giving up. I'm not saying we're going to get to 6, but I don't think we're going to be at 8 come the end of the year. Now, of course, I didn't think we'd be at 7.
You got to give me a number. None of this, it's going to be less than 8. I want to be able to call you out in January.
I'm not giving up. I'm going to say 6. I'm the long shot here, but I'm sticking with 6.
6? AJ, you were kind of in the same boat. Are you giving up on your side?
You know, I was at 7, right?
You're at 7. Yep.
Yeah. I'm gonna 8.
He thinks it's gonna stick to 8. Mauricio, well, I put off putting to Mauricio because Mauricio had his prediction based off of the Fed pivot because the world exploded. So he had between 4 and 5%. So I assume Mauricio, you want to adjust that one now.
Yeah, I think that since the recession didn't happen, again, it's all contextualized. Yes, obviously, it's not.
You don't have to caveat every time. You just give us a new one.
I want multiple scenarios too.
Yeah, I mean, what do you want from me? What do you want from me?
Give me a number. End of the year. You got to adjust that.
At the end of the year, for the 10-year or the mortgages?
Either one.
I'm gonna go 10-year, 4.75.
Okay, so almost what it is now. It's like 4.8.
Wait, hold on. Let me. You guys talk. Let me draw my trend lines here. Hold on a second.
Okay, why are you saying that? I actually think I want to change my prediction to like Mauricio. So I think if interest rates stay high, it'll be 8. If they're just kind of in between, it'll be like 7, 6.5. But if things get bad, it'll actually be more like 4.
Okay. Well, so I was in the Jays boat.
I agree with that, but I'm going to say it could also be under 4, or it could be a lot higher than 8.
You guys either we got to throw one number. That should be the rule from now on. So so I said, I was with Jay and I said like 6.25. I want to amend that. I don't think it's going to get that low, but I do think it's going to get down closer into the 7 range. I think we're going to see the 10-year treasury down to 4.25 by the end of the year. I just think it's been too crazy. The reasons for this going way up has just been too fear-based. And I think people are going to calm down a little bit, and it's going to come down. So, all right, move that on to home values. So that kind of goes along with interest rates. We'll go through this quickly because it's a little bit difficult to pinpoint home values. So because we all kind of said it's going to be regional, but it's going to be pretty stagnant and flat. And the problem is that the number one indicator is that Case-Shiller price index, and it's a pretty lagging indicator. The last reading we have is actually from July. But the only thing I could find was median prices back in July were 410,000, and they're currently 395. So technically, according to that, it's gone down a little bit. Not a perfect number, but still kind of within the realm. So is everyone?
Here's my caveat.
So does everyone still think we're going to be pretty stagnant, or does anyone want to just quickly change their answer to that?
Stagnant for the next 5 years.
Ooh, AJ,
5 years?
I mean, that 90s we saw 10 years, right?
So I did a presentation the other day, basically talking about how home values track inflation for much of the last 120 years. And right now we are way, way, way above that trend line, that inflation trend line. So one of two things is going to happen. We're either going to come crashing back down to that line, like we did in 2008, or home prices are going to stay steady for 5 or 7 years while inflation line, the trend line, kind of catches up. And I think based on supply, based on inventory, based on demand, all those things, I think home prices are just going to stay propped up until like inflation catches up. And in 5 or 7 years, we're going to look back and we're going to say home prices are where they should be, given where wages are, given where inflation is, given just the historic context, and everything will be back to normal. But I think we'll have 5 or 7 years.
Perfect. Let's pull a clip of that, and we've got our first official 5-year prediction, so we can look back 5 years from now when we're episode 500 and say, hey, Jay was right or probably wrong.
There's a great graph that I'm going to give credit to George Gammon who shows it up. So kind of what you said, Jay, if you go back to, I think 100 years or whatever, and you look at a trend line and you adjust not only for inflation, a lot of people just adjust for inflation, but if you also adjust for home size, right? Because if you look at the average home back in the 1930s and 40s, it was like 1,200 square feet. And now it's, 2,200 square feet. So just by definition, it's going to go higher, not because the house has gone up in value, but just it's a bigger house. Right. So if you adjust for both inflation and the sides of the home, you'll see that it's you look at that line, that trend line, it always goes back down to that trend line. In 2008, it came back down and literally touched that trend line before it popped back up. So the question you have to ask yourself, which is kind of where you were going at, Jay, is are we talking nominal prices or are we talking about real prices? Because if you look in real terms, you should expect that number, and it has been going down tremendously, to then touch that trend line for the past 100 years. But in nominal terms, who knows? It could be trending. It could just be like going sideways in nominal terms. It could be theoretically, it could be going up in nominal terms, but going down in real terms. If your price of your home is going up, 2% a year and inflation is 5% a year, well, it's going down 3% a year in real terms. So I got to pull that. It's very hard to find that chart because most charts are just adjusted for inflation. But it'll be interesting to track that particular metric because I think you're right. It's already going down. It's starting to head towards that trend line. And I do believe it's going to continue and hit that trend line before it pops back up.
All right. Well, let's move that over to commercial cap rates, which is basically commercial real estate prices that we all kind of said a lot of stagnation happening in that. Have we seen it go down as far as prices, therefore cap rates going up, or are we seeing that stagnation happening and think it's going to go forward? What do you think, AJ?
So I think we're going to go up a little. I think it's going to continue to rise. Now we got to be really careful here because when we pull all these in together, when you say commercial real estate, I mean, we're talking about outrageously different asset classes. So I mean,
we're not. Let's just throw office out. Office is not included. They're
okay. There we go.
Yeah.
That's a lot easier here. Yeah. All right. So take office out. If we're just talking about like the core food groups, right? Apartments, industrial, whatnot. I think we're going to see a little rise in cap rates for adjusting with interest rates, but I don't think we're going to see huge. I don't think it's not going on sale because cash flows are still good and people are paying for cash flows and hedging against inflation. They just can't pay what they were. So I think we have, a point and a half rise in cap rates overall, but I think that's where we'll end up.
Well, a point and a half from here, or a point and a half from the bottom, like a year and a half ago.
A point and a half from here. I think that's where we'll top out. So
ooh, that's a lot.
So, but how far have we adjusted so far? I guess I need to have.
So we've seen like a 20%, some places, some areas 25%, and some others,
which is about a point. Yeah, we've seen about a point in multifamily.
So if we're talking sub-markets, yeah, I do. I think a point and a half. If we're talking major markets, though, no, of course not a point and a half.
For my prediction, I'm saying we've seen a little bit, maybe a little bit more, and that's just desperation sellers. Like anything that's fully marketed, it's still getting decent prices right now. But then we are still seeing.
Are they trading?
Yeah, I mean that's the thing is there's still demand. If most of the things that people try and put on, they're asking too high, but if you really need to sell, you'll find a buyer. So maybe I'll see a quarter point, but I'm saying it's still staying pretty stagnant.
You bring up a good point, and I need to make sure this is also clear. When we talk cap rates, I'm looking more at total price, meaning that how it'll be affected due to fundamentals, meaning rent may be going down in some markets, looking at that, but that doesn't apply to a cap rate. So anyways.
And also keep in mind that the higher the cap rates start, the less an adjustment is going to affect it. And so AJ's specializes in self-storage where cap rates are higher than we are in multifamily. A point and a half in multifamily is going to be more significant.
And self-storage doesn't have Fannie and Freddie loans either, so they're affected by any loan tightening a lot more than we do.
Our cap rates track interest rates, usually historically very close.
Mauricio, you want to finish, Jay?
No, I was you can go to Mauricio first. That's fine.
No, I was just going to say Mauricio, last time he was kind of like, I don't care. This isn't my field. I'm just going to copy you guys.
That is true. I usually don't care, but in this particular case, I want to take this opportunity to point out that I was spot on this one. And I predicted that the cap rates will quote unquote inch up, which I think is exactly what has been happening and will continue to happen until the end of the year.
Wait, I just want to point out that's whatever happens when Mauricio's gets a girl back home after the, after the end of the night. He points out, says inch up.
That got out of hand fast.
It's crooked hat time now.
It's crooked hat time. It's sideways.
Let's get Ashley on the pod right now. Come on.
A lot more than inch up.
If I recall, Mauricio's exact comment last time was, I think they're going to inch up. And what's cap rate again?
Yeah.
I'll tell you, something that AJ said. I went back because to compile the spreadsheet for the podcast today. I had to go back and listen to the July episode, and something AJ said really resonated with me. He said back then that one of the things that we were likely to see moving forward was that we haven't had much price discovery. There were very few transactions. Buyers weren't buying, sellers weren't selling because they couldn't meet, and that it's possible, and at this point I'm going to say I think it's likely that values are lower, cap rates are higher than what they appear to be, simply because sellers aren't yet distressed enough where they have to sell. And when we start to see that distress continue to creep in, and we've started to see that over the last couple of months, we've talked about capital calls, we've talked about distress, at least in the multifamily market, we've talked about distress in the self-storage market a little bit. I think what we're going to see as we continue to see more distress is we're going to see more sales. And these sales aren't necessarily going to be the good sales where people are selling for top dollar. These are going to be the sales where people are selling because they have to sell. And these are going to be the lower sales, the lower price sales, higher cap rate sales. And I think we're going to see cap rates trend up just because we're going to get more price discovery.
Well, and so many of these discounted ones happen off market. So if we're dealing with somebody that needs to sell, we'll structure a deal off market, right? Nobody will even know it transacted outside. Maybe it changed, but it won't be listed, right? Nobody will even know. So we have a whole
Taxing authority won't hear of it.
Exactly. We have a whole market, right, that is happening that, is not being reported on. No. Now, of course, the big, nice ones that are listed that are going off, those are reported. Everybody can see it. Those are publicly transacted deals. So anyways.
All right, let's finish this off and let's get into the
we didn't talk about rate caps last time, right? Was that one of our predictions? I was just going to bring in.
No.
Yeah. Well, maybe we'll skip that. I was going to give some insights, but maybe I'll skip that.
well, we could do that as a segment. We talked about rate caps before at a different segment, but a lot has changed since that last one, so we wouldn't mind future episode going back to that. Let's get to some kind of more non-real estate related stuff with S&P 500. I'll declare that I'm closest so far. I said we would end the year around 4,200, which is kind of right where we are. Everyone else has us finishing kind of either 4,000 or below. So we still got a couple months left. Do we still think it's going to go below 4,000? Mauricio?
Where are we at? I was going to pull up the chart. Where are we right now?
We're like right just below 4,200.
Yeah, look, I think my prediction here was it was going to drop 15 or 20% from where it was back then, which I think is the math's right there. It's about that. Yeah, I mean, I still think it's going to go down further. I mean, nothing's happened yet. Like we haven't had any issues yet. Like everything's kind of going. It's just kind of been, treading water. Nothing's really happening. When something happens, it's going to happen, right? Unemployment's going to go up. I think housing's going to go down, and I think the stock market's going to go down. So that hasn't happened yet. So the fact that we're already down, whatever it was, 10%.
Yeah, I mean, when we were making these predictions, I mean, it was at what, 4,500, almost 46, which was the peak. It's now at 4,100. I mean, I'm sticking to 4,000. I think it's going to get there.
I'm putting my faith in you, Kyle, that Q4 is going to be a bad holiday shopping season. We're going to get some bad news after Black Friday and Cyber Monday that sales are down and things are not good and people are going to flee the market and we're going to go down. And I'm like my 3,800 number.
Yeah, I don't mind that either. I would say, I don't know. I feel like I just have to dissent just for the sake of dissenting. I'm going to say we're going to stay right where we are, 4,200, just so we're not all like, oh, it's going to be just below 4,000.
Okay, I have an idea. I think we should all do $1,000 option. We take whatever we said, and this week we put $1,000 option. We have to the end of the year, and that's our strike.
I don't even know how to do that. I've never bought an option.
We can see who makes it, and then too, who got it right will simply be reported in how much of a return they got. So
I love it. Let's do it.
It's true. All right, we'll talk about that offline.
AJ, if you could have assistant number 39, I believe it is. If you can have assistant 39, just kind of let us know how to do that.
Stocks is 34.
Oh, 24. My bad. Have assistant 24 email us and we'll make it happen.
I'm doing an out of the money put at today's price with the strike of January.
All right, let's move on to another one that I'm looking a little bit better than you guys right now, and that's Bitcoin. It was back at 20. It was below 30,000 when we predicted this. It was 29, and I said it's going to end the year between 35 and 40,000, and it's currently at 34 and change. That moves so quickly. It could have changed in the last few hours. So I'm looking pretty good there. Some of you guys said it was going to be 20.
I didn't even look once since we made it. Didn't even look before, and so I don't.
You said 20, AJ, and it's at 35. So
That's all right.
not a Bitcoin trader. I get it.
I have no idea what I said, but I'm sticking with my original prediction.
Okay, can we throw out Mauricio's quote? Definitely going to be below 20. Definitely going to be sub 20 before we go down above 50 or 60. There's a massive wall at 32. So we've already broken through the wall.
Yeah, it hit the wall at 34. Yeah, it hit the 34 wall. They went through the 32 wall. Look, I actually bought a bunch of Bitcoin right when it broke 25. So I'm actually, if we want to show like options trading, I think I did pretty well there. But yeah, you know what? I will change this because I did think back then, and at some point I still thought it was going to go below 20, and it still might. But the one thing that's changed since the last time we met is that it does look like, and that's really what's reflecting on the price right now, it does look like there's going to be a spot ETF for Bitcoin. You know, BlackRock's put its big boys and girls have put in their applications, and you know, Grayscale just won their lawsuit. So it does look like there's going to be a spot ETF, and that's obviously super bullish for Bitcoin because it allows institutional investors, pension funds, people who now can't invest, it allows them to invest. And that's really the main pop that you've seen going on. That's why it broke through 32. It's hitting its 34. It's 34 resistance, but that's the main thing.
I can't read it because Jay's fucking with the spreadsheet right now, and he's changing the fonts, and I can't read anything.
I'm sorry. I didn't realize if I change the font, that changes your local view. Sorry.
I'm trying to read it, and the thing's moving all over the place. It's like working with Google Docs, and you move one picture, and all of a sudden everything's different.
I think for Mauricio, we need to do like a Supreme Court ruling. Like we all have to like guess a prediction on a court ruling and then see who wins that.
You know, I reported on that. You know, the other one, not Bitcoin, but XRP just recently has been crushing on some of the not Supreme Court, but rulings and appellates, and that's been a big catalyst. They ruled that XRP was not a security in some parts, and so I came out with a prediction. I'm shocked the SEC hasn't actually appealed this, and everyone's like, "Oh, you don't know what you're talking about." And sure enough, like a week later, they did appeal, but that appeal kind of got shellacked. So SEC's been taking a lot of hits lately, and whether it's been Grayscale, which is going to be an ETF at some point, that was a sort of a trust, and they were trying to do an ETF. They lost that one. They've lost XRP. They just had to they had to dismiss the XRP executives from the lawsuit.
Are they just making stupid? Like, are they just going after stupid?
Yeah, they're dumb bets. They're going after the wrong people for the wrong things. It's yeah. We could do an episode on that because we did talk about before them going after Bitcoin, actually, or not Bitcoin, XRP, back when it happened. So a lot has happened since then. Maybe we can do an update. All right, we got to wrap this up with some fun ones. Let's go back to our nominees for 2024. There was some throwouts for Gavin Newsom and Tim Scott and things like that. I don't know. Things have changed. I don't know if that's looking.
I'm doing a 360 on this one.
Yeah, what are you saying?
Well, I threw out just for fun. I said Ron DeSantis and Gavin Newsom, but Ron DeSantis has just been a disaster. Not even close. So unless he's in jail, I just don't see how Trump doesn't get that nomination.
I mean, DeSantis is still number 2 on betting odds in Vegas, though. So he's still, if something happens to Trump, he's still technically that guy right below him.
I'd take Vivek for number 2.
So if you want to look at betting odds in Vegas currently, right now, Trump is -175. Number 2 is DeSantis,
which means he's the favorite.
Yes, and so sorry for you non-degenerate gamblers. The negative means you're really good. Then Ron DeSantis is at 1350. Nikki Haley, who was my pick, 1800, and then Vivek is actually he's moved into 4th but still significant out long shot at 4,500.
But still fourth. He went from not being known.
Kyle, you're the degenerate of the group. So just to make sure we're on the same page, negative 4,500 means I've got to bet $100 to win 4,500.
Positive 4,500. Yeah, you have to bet 100 to win 4,500. Trump, you've got to bet 175 to win 100. He is the odds-on favorite.
I think, yeah, unless he's in jail or somehow gets,
Yeah, they already came out. They just said he could run from jail. So, but the court system takes so long. There's no way they're getting that done before he becomes president.
How about this? Can we all agree it's going to be Trump on the Republican side?
I don't know. Maybe we need to put I like AJ's idea. We should, every time we come up with these, we should put $1,000 and we should just bet on whoever we think it is, and then we'll see where the chips fall.
Wait a second. Kyle, did you say you don't think so?
I don't see a scenario where he's not.
Okay. So I think we can all agree Trump on the Republican side. The big question is it going to be Biden for the Democrats, or is he going to be replaced?
Yes.
Yeah. Nobody's going to go against him.
Yes. They're convinced that Biden can beat Trump. And I only thought Biden would be gone if Trump wasn't the candidate.
I think Biden's still going to be gone.
I think so too.
Because he's literally gone, he's gone, or just they just kick him out?
What kind of gone are we talking about? That's a great song.
Are we talking physically, mentally, or just ballotly?
I mean, he has till the end of the convention, which is next August 20 something to bow out if he wants to. I have a feeling that with all the international stuff going on, assuming it doesn't get fixed in the next few months, the polling is going to look bad, and they're going to realize they need to throw somebody else in there.
He's already claimed the soft landing, though. So if we get that soft landing, that was Bidenomics.
Yeah, the problem is that soft landing isn't going to be agreed upon by anybody. So, I mean, it's data versus what.
Definitely not Main Street.
Yeah. So I think what's likely going to happen, and I think the smartest thing the Democrats could do at this point is wait until the last minute when it's really hard to vet a candidate, and for the other side to vet a candidate, spend the next 9 months vetting a candidate, and basically take the Republicans by surprise. I think that's their best bet.
If Biden would walk away.
I mean, that's true. They can't force him, but maybe they can. Who knows what's going on?
They could at this point, they could probably trick him into walking away and he wouldn't even know what was happening. Go shake that hand over there, and then goes out the door. Let's finish this off. YouTube subscribers. We were saying how many YouTube subscribers we were going to get to by the end of the year. So Mauricio is actually, we're sneaking up on you.
I'll take the victory lap.
No, well, we're already almost at your point. So you said 750. We're at 671 right now. So even if we just push it really hard this week, we might even get up to that. I said
guys, I've been having such a hard episode today. If you guys want to hit the subscribe button right now and get to that 750, that would make me feel much better about myself. But AJ was the next closest, I believe.
AJ said 10,000. So,
I'm sticking to it. I'm not changing it.
You got to start promoting the podcast then, instead of promoting your own.
I have the most views of any shorts or anything we got.
Oh no,
there.
I'm saying you promote it. No, you don't just your clips are doing well, and you don't have the most views. I have the most views.
Wait, whoa! Did you overtake me?
No, not on one single clip. I'm saying as a whole. Oh,
okay, thank you. Woo. I appreciate all the listeners for making me number one. Really, really appreciate that. I've never really expressed that publicly, but thank you for making me number
they're
one.
talking about on YouTube. I'm not talking about on YouTube. I'm talking off.
Okay, here we go. I'm gonna throw this out there. If we hit AJ's number, $10,000 to charity.
I'll do that too.
I'll do it.
Got $30,000 for charity if we hit that 10,000 number. Everybody listening, slam that subscribe button.
By the end of the year?
Yeah.
Yeah.
Yeah, I'm in.
Do we have to agree on the charity, or do we? Can we pick our own? Because I don't know. It sounds like one of you might be donating to the Vivek charity or something.
If that's a charity, I'd do it.
I'm in. Dude, just you got to realize, you know how hard it is to get one subscriber. I mean, it is a much harder metric to get than almost any other social media. So, but anyway,
that's true. Well, you know how we boost our subscribers is we talk about Taylor Swift. So right now we're going to go next and we're going to be like, are Taylor Swift and Travis Kelce going to still be an item in December at the end of this year?
No, end of the year, no chance, 0 chance.
It's only 2 months away. They seem to be going pretty strong.
Slim to none, and Slim has left the building.
I don't know anything about them.
They're staying together until he can renew his contract for a whole lot more money. I was reading the other day that in games that she attends, his average yardage or whatever the metric is, I don't even know what position he plays, is like 99. In the games that she doesn't attend, it's 46.
And it didn't get any better last night because Mahomes had the flu. And so Mahomes couldn't even play football. And so obviously Kelsey's numbers went down quite a bit.
So Taylor Swift's movie came out on October 13th, which is about 2 weeks ago. I mean, I'll give it another couple weeks to a month before that stunt ends and she no longer needs him.
I think they make it to the end of the year. I don't see them together long term because I don't see her as an athlete girlfriend. But I think they seem pretty enamored with each other. And this new little, it's a new thing for her, and I think they're going to stick it out.
Why do you guys know so much about this?
Why?
I want to know what an athlete girlfriend is.
An athlete girlfriend? There's a type.
Is Ashley an athlete girlfriend? What?
That's where I would go.
Ashley is not an athlete girlfriend. Actually, I broke the mold on that one. All right. I feel like we got well, we're going to crazy predictions here. So let's go with everyone else. I'm going to read off everyone else's crazy predictions. We want to say if you're sticking with that crazy prediction or if you want to make a new one. So we'll start with the best one, obviously AJ with aliens.
Yes.
He just threw out the aliens.
Yes.
That we're going to get a huge dump of documents from Congress that will open up the floodgates about aliens. Do you think that's still going to happen?
Absolutely, unequivocally. There's no way that's not happening.
Okay, and Mauricio, based on our previous conversation here, I don't know if you're going to stick to this one because Mauricio thought.
I was looking at the spreadsheet. I thought my weight was going to end up at 190. I'm like, fuck, that's definitely not happening. No, I think Trump's not going anywhere.
Yeah, so Mauricio, just to catch everyone up, if you didn't listen to the last one, Mauricio said that something is going to force Trump to drop out of the race related to indictments, legal issues, whatnot. So he's going back on that.
And he's had a few more indictments since we made that prediction, but
you don't think any of them are knocking him out? We got to. Okay, I know you're probably not prepared, so you got to come up with a new crazy prediction. Then, if you're pulling back on this one,
all right, go through the rest, and then I'll give you my crazy prediction. Then I got to run.
We'll move to Jay then. Jay says his weight's going to be 190 at the end of the year. Are you on track for that, or are you still a fatty McFatterson?
I am still both. I got more fatty McFatterson, but I changed it all around a couple weeks ago, and I'm heading in the right direction. And I'm going with sub 190.
Sub 190. Oh, nice. You're sticking to it.
Yep.
You got some new diet you're trying now, or you're just fasting every week again?
What are you now? 275? What are 260? What are you now?
I am 202.
Yeah. When I said fatty McFatterson, it was a joke. He's not fat at all.
No, I'm a little. So
Jay also said that some Republican candidate that runs on the platform of pardoning Trump and Trump will support him. That's going to be the Republican candidate. Are you sticking to that one, or?
So I'm not ruling that one out. I still think that's a very reasonable prediction.
All right, and we got one final one that Elon Musk will sell one of his major companies.
Yeah, I was thinking up until about a month ago that like he could divest of Twitter, but he's starting to figure out. He got smart and he's starting to figure out how to make Twitter super valuable. Basically, he's building some AI technology, and he's supposedly using Twitter as the data to build the large language model, which personally I think is the literal best use of Twitter to leverage that data to do AI and to teach AI. I'm not sure I necessarily want to be taking advice from that AI. Or
what are you saying, that not everything said on Twitter is true
or good?
All right, Mauricio, we know you got to get going, so throw something out there and then hit the road.
Before this year is over, we are going to do one episode where we're actually drunk before we start.
That's going to be a tough one with Mormon AJ, but
Kyle, you and I will do it. You and I will do a happy hour, virtual happy hour, a couple hours before, catch up on stuff.
Mauricio and I are going to go rogue. We're just going to upload an episode without the other two knowing, and we're just going to be hammered. It's going to be 10 minutes long of us just slurring.
In fact, you won't even know you uploaded it.
Exactly. I won't even know.
Maybe I'll go see Jay. I was gonna say maybe I'll come see you, Kyle, and we'll drink together and before the episode. But then I remembered you live in Philadelphia and it's fucking snowing over there. Like, no way I'm going.
Well, how about this? I will meet you in Vegas for the Super Bowl because the Eagles will be there in Vegas for the Super Bowl because my prediction is Eagles first place by December, and they are there right now. So I don't see any of that changing.
If they make it to the Super Bowl, I will meet you in Vegas and we'll do an episode from Vegas, Schnockered.
Lock it in.
I'll make that promise. I'll make that promise.
I'm there. I'm coming.
All right, guys. I'm gonna bail. I gotta run. I'll see you guys next week.
All right, see you, buddy.
See you, man.
See ya.
I also said there's going to be a massive AI scandal. For some reason, I don't know what happened to AI. All of a sudden, just enough wars happened that people stopped talking about it. But yeah, I still think there could be a massive AI scandal, but I'm feeling less confident about that.
That, Kyle, is actually, I think we should have a prediction on. Do we get into war in the Middle East?
I had that on the list, but I didn't. We were running out of time, and I didn't. I was going to say, how many wars is the U.S. going to be proxy to by the end of this year? So first of all, as of right now, they have not invaded Hamas. Israel has not invaded Palestine. So that still technically isn't a war. We have the war in Ukraine with Russia and Ukraine. So right now we have one. So by the end of the year, are we going to have two? Are we going to have one because Israel invaded and Ukraine was wrapped up? Or are we going to have zero and everything's going to be hunky-dory?
I think we'll have two. We've already threatened Iran. And I think basically if they get in, it's over. I think if they jump in.
I don't think Iran's getting in, though.
I mean, maybe not. I hope not.
Pretty evident that the U.S. is like, please just don't do that. We don't want to have to mess
test
up.
them. Like, do it. I dare you. Do it. Like, so.
I don't know if you want to weigh in on that, Jay.
We should do an episode on this. I can't sum up my thoughts in 5 seconds.
That's true. I do think we're going to have two wars by the end in the next 2 months, though. So
I think proxy wars.
Yes, proxy wars.
Well, we already have those.
Well, as I said, technically Israel has not invaded yet, but I think they're just waiting. Basically, the scuttlebutt is just because they're waiting for the U.S. to get their ducks in a row in case shit does hit at the fan. But okay, fair enough. Let's finish this off with a nice, fun little top 10. We since we're doing predictions, I thought we would go with the top 10 predictions that The Simpsons got right. So everyone talks about this, the Simpsons, how they throw out these random predictions and they got right. There's one famous one. I'll leave that to the end, and I assume you guys are both going to be able to call it. But we'll start with the most recent one. Back in 2006, The Simpsons did an episode about the submersible disaster going down to the Titanic, and then it literally happened last year. Back in 1994, the Simpsons predicted accessible space travel for just random citizens to travel to space. 95, they predicted smartwatches. They also predicted that there was a scandal serving horse meat in real meat, and that actually happened in the EU, that they were trying to conserve money by serving 29% horse meat in some of these beef. They predicted a three-eyed fish. There was an episode about a three-eyed fish that was close to the nuclear power plant, and that literally happened. They found a three-eyed fish close to a nuclear power plant. They predicted the Walt Disney Fox merger. They predicted FaceTime. They showed an episode of where they were showing the future, and Lisa was FaceTiming on her phone. So they predicted that. They were eerily similar with the pandemic to what actually happened. They had a pandemic episode. They had an episode where reefer or weed or whatever you want to call it was legalized in Canada, which it is. And then what is the final one that everyone talks about?
Trump.
Donald Trump, the president. They predicted that.
Even on the escalator and everything.
Yeah, it was great. All right. We have no plug for Mauricio, so I'll plug it for him. Tune in Mondays to his his what's it called, live, Mauricio Live, something live.
Real Estate Syndicator Live.
Real Estate Syndicator Live. AJ, what do you got to plug for us?
Oh man, I am really not ever prepared for this. Jay, you go first. I haven't even thought.
Let's see. Got some deals coming up. If you want to invest with us, go to investwithj.com.
Again,
Letter J, investwithj.com.
best part of that is you get to talk to Jay on the phone if you go and sign up.
Yeah, jeez. But only if you're serious. Please be serious.
What are you saying? Of our 670 subscribers, they're all serious. AJ, you got anything coming up?
Yeah, I'll do the same. We're wrapping up a development, and we have our fund. We're finishing up our development and our value add fund this year. So I'll do the same as Jay.
All right, and I'm going to plug, as always, my wife, Badash Investor. Sorry, at Badash Investor. Look her up on your socials. She's much better looking than Jay and smarter too. So might as well go follow her. Well, my limited edition special Eagles Bud Light has actually been gone for a really long time. These Bud Lights are like water, so I was done about halfway through. But they do make you have to go to the bathroom, so I got to go hit the head. So I will see you next Tuesday.
Yeah.
See you guys.